Chinese Communist Party's CCP decision to abandon real estate market controls has triggered a catastrophic collapse in housing prices, severely devaluing banks' mortgage assets. A wave of loan defaults and stalled construction projects is running parallel, with ripple effects beginning to batter the banking sector. After China lifted home price caps, banks holding vast real estate-backed loans face immense pressure from asset devaluation and soaring bad debts. The early signs of a potential bank failure wave are already emerging. According to Yikai Global, data from Kichich's enterprise early warning system shows that in 2024, 199 bank branches were deregistered, with village banks and rural commercial banks hit hardest. This included 36 credit cooperatives, 56 rural commercial banks, 6 rural mutual aid societies, 100 village banks, and 1 city commercial bank. The number far exceeds the total closures from 2021 to 2023 combined. Deregistration methods included 89 approved dissolutions, 102 mergers, 8 business license cancellations. What does this mean? It means, on average, one bank dies every 2 days. And this is only the publicly disclosed data, not the full picture. Meanwhile, except for the Agricultural Bank of China, the 6 major Chinese banks saw a combined reduction of nearly 361 offline branches in 2024. China Post Savings Bank, with the most branches, had 39,224 outlets by the end of 2024, down 140 from 2023. It remains the bank with the most offline branches. Industrial and Commercial Bank of China, ICBC, the second largest, reduced branches from 15,495 to 15,365, a drop of 130. China Construction Bank cut branches from 14,255 to 14,166, down 89. Bank of China reduced outlets from 10,299 to 10,279, a decrease of 20. Bank of Communications shrank from 2,834 to 2,818, down 16. This equates to roughly one branch closing every day. At the same time, the National Financial Regulatory Administration's website shows that 2,483 commercial bank branches were approved to exit operations in 2024. Despite this, state media describes the process as slimming down for health, never using the term collapse, but instead euphemisms like optimization, restructuring, mergers, or upgrades. No matter how the rhetoric sugarcoats it, the reality is clear: banks are crumbling. Analysts suggest the only rescue option might be the central bank printing more money, but this could further worsen the economic situation. Sai Tian, a professor at the University of South Carolina, warns that a financial tsunami in China may be imminent, with more bank failures likely in the future. Notably, as economic data reveals crises and falsified figures become harder to conceal, China has stopped releasing hundreds of economic indicators previously used by researchers and investors. This makes it increasingly difficult for outsiders to accurately assess China's economic situation or predict the crisis's eruption. Why is China's banking sector suddenly facing a collapse wave? The reason is simple: the real estate crash. China's economic miracle over the past 2 decades was built on a real estate bubble. Most citizens' wealth is tied up in property, and banks' assets are almost entirely bound to mortgages. Now, that myth has shattered. Loan defaults: banks can't recover funds as borrowers fail to repay mortgages. Property devaluation: collateral becomes worthless. For example, a Zhengzhou project by Evergrande, once China's largest developer, dropped from 11,000 yuan per square meter to just over 3,000 yuan. Developer bankruptcies, with stalled projects piling up. Banks' loans simply evaporate. Even more alarming, some banks may have used devalued collateral for secondary lending. In the current economic downturn, this could snap their funding chains. In other words, these drastically devalued assets, which underpin multiple rounds of financing, are now a house of cards. Once it collapses, banks' funding chains crumble like dominoes. Faced with this, the government's stance isn't to save, but to let go. Since 2024, at least 18 cities have lifted price controls on new home sales, granting real estate companies autonomous pricing rights. Housing prices are now fully left to the market. On the surface, this looks like market-oriented reform, but in reality, it's total abandonment. Regulators know the fiscal system can't prop up the market anymore. Continuing to support real estate would require massive fiscal injections, but the treasury is already riddled with crises. So, they've let go. allowing prices to free fall. As long as there's no widespread explosion, the facade of stability can still be maintained. But at what cost? Who bears it? The banks, the depositors, and every ordinary person. According to CI's data, as of December 1, 2024, China's non-performing loan ratio reached 1.5%, totaling about 3,820 billion yuan, or roughly 535 billion USD. Many banks rely on borrowers using new loans to repay old ones to prevent defaults, delinquencies, or breaches, keeping accounts normal on paper. Others transfer assets or risks off balance sheet or to other entities to reduce reported pressure, hiding the true scale of the problem. Given the CCP's long-standing practice of concealing real data, this figure is far from the whole story. Even more shocking, some depositors' money is being swapped out. In Henan, Shandong, Anhui, Inner Mongolia, and elsewhere, depositors frequently report being unable to withdraw funds. Some banks covertly convert current deposits into wealth management products or structured deposits, a bank product combining fixed deposits with financial derivatives. When markets fluctuate, not only can funds not be withdrawn, but even the principal may vanish. January 20, 2025, Henan Xinyayan Guangshan ICBC case. A woman in Guangshan, Henan, discovered her ICBC deposit was secretly converted into a wealth management product. She broke down in tears in the bank lobby, sparking widespread attention to banks altering deposit types without proper disclosure. October 21, 2024, Shandong Zibo Qushan Bank case. A woman in Zibo, Shandong, found her over 400,000 yuan deposited over years at Qushan Bank had a balance of zero. Bank statements showed every deposit was withdrawn the same day without her knowledge, leaving her account empty. This issue affected over 100 depositors. Netizens commented, "Did employees divert the funds to buy wealth management products? Why could they transfer it out when even the depositor can't?" The bank's latest response claimed the depositor leaked her account number, password, and other critical information, causing the loss. Qushan Bank's customer service stated they were investigating and noted that deposits are covered by deposit insurance up to 500,000 yuan if the bank goes bankrupt. Here's a quick clarification. Yes, China has a 500,000 yuan deposit insurance system, but it only kicks in if a bank officially goes bankrupt. In reality, most banks are merged, restructured, or technically exited, bypassing compensation processes. When funds are frozen or incidents like this occur, depositors may wait indefinitely or never recover their money. Starting April 18, 2022, 4 village banks in Henan abruptly shut down online withdrawals and transfers without warning, leaving depositors unable to access funds. This triggered widespread panic, with depositors staging multiple protests and rights defense actions. The incident involved billions of yuan and affected about 400,000 depositors. To this day, no authority has admitted to freezing the funds. From May 89, after the CCP's central inspection team arrived in Henan, dozens of depositors traveled to Henan and secured appointments to meet the team. But on the eve of the meetings, they were illegally detained by multiple plainclothes officers in Zhongzhou International Hotel and Jinhua Hotel, barred from meeting the inspectors. Depositors shouted from the hotel saying, "We want to go out, we want freedom. Why are you restricting our personal freedom? Have I committed a crime?" Henan banks, give me back my deposits. Look, so many people are restricting our personal freedom. Is this a mafia? We don't even care about our lives anymore to get our deposits back. If I don't get my money, I have a son and a daughter, and generations will come after you to demand it. Banks employ all sorts of tactics, not only covertly harming depositors, but also openly tightening controls. Many banks now restrict transfers, withdrawals, and spending, with limits as low as 500 yuan, citing anti-fraud measures. Case at China Post Savings Bank, a man was required to scan a Public Security Bureau QR, fill out information. "I have an anti-fraud app. If I don't scan this code, you say I can't do business, and you'll call the police." What's that supposed to mean? Harbin case, a man's bank card was suddenly limited to 3,000 yuan. Customer service said he could fix it at any branch with his ID and card. Instead, he was asked to prove, "I am me." What proof do you need? Utility bills. I'm holding my own ID and my own bank card, and I can't prove it's me. Call police. Can you process it? No. Why not? Because it doesn't meet regulations. Show me the regulations. Call police. It's our internal policy. Your transfer limit is 3,000. What's the reason? Just wait. Wait for what? The manager arrived, the province, our parent bank, and our bank require it. Internal documents aren't for public release. When police arrived, the teller said, "You don't have the attitude for normal business. I have reason to suspect you're causing trouble." December 6, 2024, Suzhou Bank case. A man withdrawing money was asked for personal privacy details. He found it unreasonable, called the police, and was detained instead. I'm going to explain the relevant laws to you. No need. Since the bank says there's a warning, cooperate and provide the required documents. Do I need to provide my personal privacy? It's not about privacy, it's for business needs. Why does business require citizens to provide privacy? For example, when you withdraw money, or one day, answer me now. Don't film my face, I'm warning you. Step back. Citizens have the right to supervise. Don't cause trouble. Withdrawing money is simple, don't make it complicated. Provide the materials to process it quickly. I won't provide my personal privacy. Hand over your phone. This is my personal property. Tell me, do citizens have supervisory rights? I warned you. I'm here to resolve this, don't cause trouble. I said, I won't provide my personal privacy. To the police station. What law did I break to go to the police station? In May 14, 2025, Zhuzhou, Henan case. A man said his aunt, injured and hospitalized, sent family with her ID to withdraw funds for treatment from Agricultural Bank of China. The bank insisted she appear in person. Complaints were futile, so the family carried her on a stretcher to the bank. Even then, after 2 hours, the money wasn't released. She died at the bank's entrance. It took 6 hours to get the money. By then, she was already in the morgue. This is modern China's rule of law. The video showed armed police guarding the bank. Short version. What are you withdrawing money for? To spend, to consume. Cancel my card and give me my money, I'm not keeping it in the bank. Netizens suggested, what's the money for? To deposit in the bank next door. As one woman in Sanya, Henan learned earlier this year, scammers drained her 3 million yuan via auto-debit SMS, leaving her 10,000 yuan for living expenses. Netizens commented, why can scammers withdraw millions without restrictions, but ordinary people are limited to a few thousand? My 1,000 yuan transfer was blocked. How do fraudsters move millions? Banks require appointments for withdrawals over 50,000, yet scammers bypass this. Strange rule. No limits when others send me money. But I'm restricted when I move my own. The Chinese Communist Party has not only collectivized land, but is now collectivizing people's money. Despite countless tragedies, some remain blind until it hits them. In Henan, a bank offered an electric tricycle for a 100,000 yuan deposit, drawing crowds. What will their fate be? Beyond cash controls, selling fake gold, and pushing one-way wealth management products are banks' key ways to make money and cling to survival. Many believe the state won't let banks fail because they're state-controlled. But history tells a different story. The Soviet Union had state banks. Argentina had state guarantees, yet economies collapsed, nations fell, and depositors were left in the dust. China is no exception, and its banks are no exception. When a nation's real estate bubble bursts, banks fail one after another, data is sealed, regulation fails, and social trust fractures. Ordinary people bear the silent cost. This isn't an economic fluctuation, it's the end of an era. And that moment has quietly arrived.